Good morning, Bix Weir, roadrunner.com with your morning horn of Z's, your sip of coffee with chaga. Hey, yeah, I'm out getting a breather. Out of the house, get out of the house. We're not on lockdown, right? Didn't Trump say something like that? It's been 14 days already in the last 14 hours. All right, so here's what's going on. Um, BlackRock. You've been hearing a lot about BlackRock lately. I had done so much research on BlackRock way back in the day that I had to go back through the Road archives. And all you have to do is do a search function for BlackRock, find you all kinds of articles how the silver short was being transferred from JP Morgan to BlackRock. Now, it started out Citibank, and they almost had it done. And then the regulators or the DOJ came in and shut that down. So now BlackRock is going to take over the silver short, control the silver market. BlackRock is not a bank, so they don't have the same constraints. They are a criminal operation run by criminals, absolutely. Largest hedge fund in the world, I believe. Anyway, here we are in Bloomberg. BlackRock becomes key player in crisis response for Trump and the Fed. Surprise, surprise. Trump? What the deal? What's the deal? I thought you were here to free America, not to further enslave us with the criminal banking system, the criminal market rigging system. And BlackRock, of course, is the sponsor of the silver ETF SLV. Larry Fink, I've been talking about these schmoes for a long, long time. President sought advice from Larry Fink in Corona fallout. World's largest asset manager also helped in the crisis of 2008. Helped? Stole assets in the crisis of 2008. They were tiny and they grew to be gigantic because they were in charge of figuring this all out. Let's see how many assets we can steal and grow the size of our hedge fund. As President Donald Trump grappled with the coronavirus outbreak last month, he boasted at a press conference of tapping a secret weapon for advice. Larry Fink, the chief executive of BlackRock Inc., provided insight into Trump on coping with the fallout from the pandemic, and once again put his firm at center of white-hot economic emergency. Check this out. Listen, BlackRock is no stranger to stepping in during financial crisis cleanup. It played a similar role in 2008, but back then, it was a much smaller firm with focus on fixed income, closer to Pacific Investment Management Co., which had renowned money managers Mohammed El-Aran and Bill Gross at the helm. More than a decade later, the investing landscape has shifted, or it was stolen by BlackRock and friends. BlackRock has a premier role in helping the Federal Reserve stabilize markets. The central bank has hired BlackRock to help manage its economic efforts beyond U.S. borders. The Bank of Canada has called on the asset manager as it shapes its response to the meltdown. They are chief market riggers. They're taking over. Basically, they're taking market rigging private. Private market rigging. You don't have those pesky bank regulators on your back, do you? Yeah, remember where this silver hot potato has gone over the years. Bang, 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 bang. Bounce from JP Morgan. We all know him. How'd JP Morgan get it? With the dying of Bear Stearns. That's where JP Morgan, remember that crazy little incident of Bear Stearns going down overnight? That was all about silver. We're going to see the same thing with JP Morgan. No rigger, king rigger, has survived the silver onslaught. All those banks crash. Drexel Burnham from the 1970s and 80s to AIG in the 80s and 90s and 2000s. Bear Stearns. We all know what happened. All these companies, now AIG is still up and running because they got bailed out with $350 billion in 2008. But Bear Stearns is still up and running. And then JP Morgan took it over when they bought Bear Stearns. That's why the government had to give them, I think it was a $10 billion guarantee or $30 billion. Huge guarantee. And everybody's like, they just bought it for $1 and now you're asking for a $30 billion guarantee. That was all about the silver short, as our friend Bart Chilton told us before he passed away. Told us that JP Morgan was rigging the silver market illegally. And he was dead a couple months later. I hope he's in witness protection is what I hope, but who knows? So yes, BlackRock is the kingpin on the that and the Carlyle Group. The Carlyle Group mainly does the overseas black ops stuff with the military. But BlackRock, knee-deep in silver and gold manipulation, always has been. And just to show you what fine, upstanding citizens Trump is tapping, BlackRock suspends ETF issuance due to surging demand for gold back in 2016. Basically, they control the gold and silver market by sponsoring the ETFs that they use to rig the markets. Here's the CFTC. BlackRock Institution Trust agrees to pay $250,000 penalty for settling charges of prearranged trading and fictitious sales on the CBOT. Why? Why is our government officially turning to criminals to keep our criminal system going? That's exactly why. Criminals know how criminals behave, and they're in charge of being the criminals. Welcome to the America that you never wanted. Anyway, so I went through, I did a search for BlackRock on Road to Ruta. Just hit search. In the search function, go to BlackRock, BLACK. And you will see 32 investigative articles I had written. These aren't videos. These are full-on articles about BlackRock and the rigging of the silver market. There's over 1,000 of those. And here's one of one of my first mentions. For a long time, I've thought that BlackRock would take the place of J.P. Morgan as the arm of the U.S. government rigging market operations. I thought this because many of the managing directors of BlackRock once held key positions in the U.S. government market rigging operations. When BlackRock took over the ETFs GLD and SLV, I knew it was just a matter of time. Also, knowing that BlackRock is the number one largest shareholder in JP Morgan solidified my theory that BlackRock is taking over the position that JP Morgan currently holds. This solves many problems for the banking cabal, not the least of which is regulation issues that banks are subject to and hedge funds are not. Watching Larry Fink, the CEO of BlackRock, talk about the large banks not being able to thrive in the new Basel III rule environment, it became clear to me that the transition from JP Morgan to BlackRock has already begun. Dun, 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 dun. And now JP Morgan's shedding their silver short position. Who's going to take it? BlackRock. Because they don't have to declare. And then I'm writing this stuff back in like 2013, 2014. That's how long this transition's been going on, the market rigging. And here we go. The latest report, this is for the OCC quarterly derivatives. This is when Citibank, who was going to take it over from JP Morgan until Citibank was told to stand down, they were building their silver short position, and then one day, boom, it was gone. The latest report of the second quarter 2013 was that just released shows a shocking reversal of Citibank's silver derivative positions, shedding $8 billion to come in at only $4 billion. Huge reversal as of June 30th, 2013 is the OCC data published reports in these three. I haven't looked at the OCC data in a while. I mean, when you hit a point that you know it's rigged, you know it's always been rigged, and you know that one day you believe that rig is going to end. Do you really have to do more research on it? Oh my God, look, I've proven for the 400th time that the silver market's rigged. Big deal. But people still, Ted Butler's been doing this since the 1980s. And he proves it with the CFTC's own data, with the CME's own data. It's so criminal, it's beyond criminal and scary. And here's BlackRock. Financial Times. Banks plan to write off. Now this is going back a while with GATA. This was 2014. Banks plan to write off derivatives when a counterparty fails. The world's biggest banks have agreed to tear up the rulebook on derivatives to make it easier to resolve future failing institutions like Lehman Brothers. People familiar with the matter said 18 banks and dealers ranging from Credit Suisse to Goldman Sachs and JP Morgan and BlackRock have agreed to give up the right to pull the plug on derivative contracts with a stricken institution. Several months of complex talks involved regulators, asset managers, but were led by dealers under the umbrella of the International Swaps and Derivatives Association. Hello, Blythe Masters. Unbelievable. And then I said, oh, so there you have it. The end game, according to the banksters, just forget about the derivatives. If things go bad, hang on to all those real assets you have secured and ride out the chaos. Oh, what a plan. But the best laid plans always seem to backfire on the banksters. Oh, as I have said many times, that I think the hedge fund BlackRock, this is 2014, may be taking up the silver short from JP Morgan. So, did you catch the line in the article about BlackRock? Quote, one of the most important is large financial institutional investors such as BlackRock would not be covered by the changes, particularly if they are cross-border counterparties. The criminal gang, BlackRock, better watch their backs on this one. JP Morgan has been known to fry bigger fish than them. We'll see. JP Morgan, out of their silver long, have a on the COMEX, on the paper contracts, and have over 1 billion ounces of physical silver in their vaults. Hopefully, the U.S. government will go in there and confiscate it and say, okay, you're busted for RICO charges. You owe us 3 billion ounces, not just the billion, because RICO charges are 3 times the crime. Yeah. And that little side discussion with in 2014, JP Morgan was supposed to shed their commodity sales commodity units. That's when Blythe was kicked out. But they hung on to their gold and silver, of course. All commodities except gold and silver. But Ben Bernanke said that people only hold gold and silver for historic reasons. No, they control gold and silver so that they can have an economic system that is completely ridiculously untethered to anything. Print as much money as you want, build up your infrastructure, build up your military, give everybody free money, free money, free money, free money. That's the idea. And ultimately destroy the currency, go back to a gold standard was the original idea. I think it's now going to be on the crypto side. You got to have both. You got to have silver or gold. I'd say if you have any gold right now, you're insane. 110 to 1 ratio. In-ground ratios, I think it's about 2 to 1. Above ground ratio is 1 to 1. And the rigged price ratio is 110 to 1. If you have gold, you are insane. But it's too late for you. Why? Because nobody has any silver. You can trade 110 ounces of silver for 1 ounce of gold anymore. That ship has sailed. You'll get a lot less gold than 110 ounces. Although the COMEX says, according to the COMEX, it's crazy out there, I tell you. And more on BlackRock. This is one guy who's been one of the lead guys in market rigging at the Fed, at the Treasury, at BlackRock, is this guy, Peter Fisher. Peter Fisher is an absolute 100% market rigger, all the way going back to his father, helped with the market rigging. Peter Fisher is a member of BlackRock's executive committee and a senior director of BlackRock Investments Institute. From 2007 to 2013, Peter served as co-head and then head of BlackRock's fixed income portfolio management group in Asia. Prior to joining BlackRock, he served as undersecretary of the U.S. Treasury for domestic finance from 2001 to 2003 and worked for the Federal Reserve Bank of New York from 1985 to 2001. The guy is knee-deep in criminality and ends up at, of course, BlackRock. And this guy, I read a little bit about him, and yeah, of course he went to Harvard, and Harvard Law, we all know what happens there. Went right into the Fed after Harvard Law because his father was this guy, Roger Fisher, professor at Harvard. Keep it in the family, keep it in the bloodline, right? But I was reading this guy, Roger Fisher's resume or Wikipedia page. Listen to one of his ideas. This is his idea to prevent nuclear war. In 1981, this was his idea. Fisher's known for a unique idea towards nuclear deterrence. In a March 1981 article, while discussing the importance of reaching a wise decision, especially in terms of nuclear arms, he suggested implanting the nuclear launch codes in a volunteer. If the President of the United States wanted to activate the nuclear weapons, he would be required to kill the volunteer to retrieve the codes. This guy's crazy. That's just insane. So you embed a microchip in a volunteer who hangs around with the president, and if he ever wants to launch the nuclear codes, he's got to kill this volunteer to get to the codes. Oh my God, what has happened to the world? I don't know. It's all crazy. And, of course, what happens next? Trump puts Peter Fisher on the COVID task force. These people all sleep together. I swear to God, it's crazy. And then I found a great article I wrote years ago called "Everybody Loves Silver" that I'll do another talk about. I read through this; it was awesome. I miss writing. I can't do it anymore. All I do is videos. That's because with the writing part, it's a different mindset, and you got to get into it. And I would have to. It's like a muscle. You gotta kind of exercise it once in a while. But if you go to Road to Ruta, there's thousands of articles that I've written about silver manipulation, gold manipulation, Road to Ruta theory, Grand Canyon topics. So go to roadtoruta.com, hit the search button. That'll take you right here. Search for any topic you want. It'll take you all over the Road to Ruta website. And don't forget to sign up for the free emails. Put your name and email address here on the left. All right? And join the Road to Ruta. This is Bix. I'll talk to you later.